As investors, we all wish for some tips that can act as the golden key to unlocking the chest of fast wealth. Well, you just got lucky, because we have the guidebook of the Oracle of Omaha for you. In this video, we are revealing 10 investing tips that can transform your financial future and help you build wealth like a pro, straight from Warren Buffett himself. Stick around, because these timeless strategies can help you invest smarter. Make sure to watch till the end because, right now, you might be doing the last one wrong. Number 10. Invest early. If you haven't started investing early, start now. Because investing early can give you the power of compound interest. And as Warren Buffett says, compound interest is the eighth wonder of the world. People who understand the idea of compound interest earn it, and the ones who don't are probably out there paying interest. Just imagine investing $10,000 today. Now, even if the interest rate is just 10% for the year, you can grow almost $100,000 in the upcoming 25 years. If you're patient enough, compound interest can work wonders over the time. And who doesn't love extra money in their hands? Number 9. Don't spend unless you have to. As an average person, our first instinct after getting paid is to buy stuff for ourselves. And while it's good to treat yourself with something nice once in a while, you shouldn't splurge every time you get paid. Warren Buffett is massively rich, but despite his wealth, he's known to be very frugal. He has literally been living in the same house since the 1950s. He bought a house back then just for $31,500, and he is still living there. So if a man who has enough money to buy millions of these houses can avoid unnecessary spending, I believe we should too. Number 8. Always invest in long-term plans. As Warren says, our favorite holding period is forever. He has held stocks like Coca-Cola and Occidental Petroleum for literally decades. And by focusing on the long-term value of these businesses, he has been earning millions of returns for years. While short-term noise might be tempting, it will only give you enough to survive for a few weeks, or maybe months, or maybe even a couple of years. But that's it. If you're looking for long-term success, then you have to make long-term plans. Number 7. Invest in yourself. You are your biggest asset by far, so it is very crucial to invest in yourself. Once you get too busy with life, it will be hard to focus on yourself. So now is the time to prioritize yourself. Invest in yourself as much as you can, whether it's money, time, or effort. Anything you do to improve your talents and make yourself more valuable will get paid off. And those returns will be bigger than any other, because as Buffett says, anything you invest in yourself, you get back tenfold. And the best part is that the investment you make for yourself is never going to be undervalued. Instead, it's always going to work out for the best. Number 6. Embrace failure as a learning opportunity. As a child, you may have heard someone telling you not to be a sore loser. Well, this is just an adult version of that. Buffett once said, "Only when the tide goes out do you discover who's been swimming naked." And this has been established that failure is the first step to success. So there is no point in wallowing in self-pity because of a failure. Instead, you can use that as a learning opportunity and flip the course of your finances. Number 5. Give back. Not many investors will tell you this, since most of them only care about what they earn. But as a humanitarian, Warren Buffett has always put importance on giving it back to the community. He once said, "If you're in the luckiest 1% of humanity, you owe it to the rest of humanity to think about the other 99%. The man himself has donated billions of dollars to charity. And not just that, Buffett has even pledged to give away 99% of his fortune. Now, you may not be a billionaire, but you can still enrich your life by giving back. Number 4. Invest in what you understand. Warren Buffett has said this on many occasions, and he continues to emphasize on this one tip. Never invest in a business you cannot understand. Buffett avoided investing in tech stocks because he never understood the market. Yes, he has always avoided tech stocks simply because it does not align with his circle of competence. As investors, we should take this as a lesson and learn that we cannot grab everything at once. So, it's probably for the best if we hold on to the things that we can handle. By things here, I do mean stocks and businesses. Don't try to put your money into areas that you cannot understand because it will always take more than it can ever give to you, be it your money or your time. Number 3, stay humble and continuously seek knowledge. One of the major keys to opening the gate to success is staying humble. One should never ever let his wins get to his mind. Yes, it's a good thing to be proud of yourself for achieving something, but never let that pride turn into arrogance. Because an arrogant human can never achieve anything in the long run. The world continuously progresses forward, so in order to move along, you have to admit that you can't always know everything. You have to be open to the idea of learning something new, and you have to use the knowledge that you learn in your decisions. This is how you build wealth while moving forward with the world. Number 2, invest at low prices. There is a saying by Warren Buffett that goes, "Price is what you pay, value is what you get." Well, this is for people who believe that a higher price means better results. It's not always like this. An example of this is Coca-Cola in 1988. No one was buying the company's stocks as they didn't think that such low-priced stocks would pay good returns. But Buffett saw the value of the brand, and he earned substantial returns all these years. So, this is your sign to stop depending on the price tag and listen to what your heart and mind tell you, because sometimes it's better to do what you think instead of following what the world has been doing. Number 1, avoid debt at all costs. This is something Buffett has emphasized on so many times. According to him, one should never put themselves in a situation where they have to work hard just to pay off their interests. He had always warned people against credit cards. Since the interest rates are high on credit cards, it would make sense if people avoided these. Like when you're making a purchase with your credit card, you're basically borrowing money at that interest rate, which, by the way, just keeps getting higher. If the interest rate is 18%, that means you're borrowing money at literally 18% just to buy a dress. That's like a one-way ticket to be broke. Whether you're a seasoned investor or just beginning your financial journey, keep these tips in mind before you make any investing decision. Did you find these tips helpful? Let us know in the comments below, and make sure you subscribe to our channel so that you can stay in the loop and never miss out on any of our videos. Subscribe now! See you in the next video.